Hello, I'm Peter Lee. I used to call myself Peter Pan. For those who are not familiar with me, I'm a professional trader in Hong Kong. I trade the stocks and index future. About a month ago, I started this channel and recommended four stocks. Even though the Hang Seng Index dropped 2,000 points, most of my stocks I recommended are still rising. And also last week, I predicted that the world market will drop and the Hong Kong China Enterprise Index will drop about 400 to 600 points, which is what exactly happened. What happened is the world market did drop, and the Hong Kong China Enterprise Index did drop 500 points. So I recommend you to look back to my prior videos to get good investment ideas. And also, there's a good news that I have set up a donation account. This is the bank. The bank is Bank of East Asia. The bank number is 157-68-001-880, and the company is YCL Company. So I welcome your donation. The donation information is also on my Facebook page, the account information, and also on my YouTube page. And one more important thing is that I've set up the Facebook, and I highly recommend you to like my Facebook because I'm going to be putting important market information in my Facebook. I won't be taping any videos for this information, and this information are important for you to make investment advice. So I highly recommend you to like my Facebook so that you can get this information and make better investment decision. Okay, so today I'm going to talk about the Hong Kong stock market. On the 22nd of April, I predicted the market bottom, which was at the time, and it is risen to the 11,300 level, which is what I predicted. But unfortunately, at that time I also was thinking about that the money from the QE3, they are in the USA and the European stock market at the moment. Those QE3 money will come from USA and the German and the France stock market to Hong Kong and the China market, but it didn't happen. Unfortunately, those money didn't come here. Well, they have good reason to come here because the valuation is very low for both Hong Kong and the China stock market, but they decided not to come here. So we're facing this bad situation. The Hong Kong stock market won't go higher. It will be in a fluctuation situation. But important thing to remind you is that it is a bull market, but it's a not so good bull market. Okay. So what we are waiting for right now is for the Chinese government, the fiscal policy of Chinese government to lower the interest rate and lower the deposit rate. But unfortunately, this will take some time. The reason why it takes some time? Well, the reason is because of the real estate bubble in China. The real estate market in China is red hot right now. Both the price of the housing and the volume of transaction is rising very fast. Very red hot. Now. Right here, looking at this annual report is Hobson Development, a development company in China. 754. Look at the report. The 2012. Look at the earning per share is $1.72. Prior years, 82 cents. So it's risen one-fold. And so you can see from this, the Chinese property market, real estate market has been a major bubble, price rising significantly. But if you look at and also you look at the most recent report, the same company, but they're still making good money. The trend, the hot rising trend seem not to be slowing down at this moment. So the Chinese government is facing this terrible problem. So that's why, because in order for fiscal policy to lower the interest rate or the deposit rate, one important thing is the housing market couldn't be too hot. If you do this kind of fiscal policy while there's a bubble in real estate market, the real estate market the bubble will burst. And then what happened will be something like the Japanese stock market and the economy. About 1985 to 1990, at this period, the Japanese economy has been rising very fast. The economy is very good. But at the end of the 1990s and the beginning of 1991, the real estate market bubble burst and then causing a cascade effect. And then since then, the Japanese economy has gone straight down and never recovered. So it's very important that the bubble be controlled, the real estate bubble be controlled. Otherwise, it may have what happens in Japan will happen in China. And the Chinese government is very concerned about it. That's why even though the economy has been slowing down, if you look at the most recent the data, well, it's shown that the export growth has slumped. Why the data was fixed up. Prior data is just a forged data. This is the real data, and the economy is slowing down. The Chinese government want to stimulate the economy, but unfortunately, they are facing this housing bubble, and they couldn't do anything at this moment. But is the problem really so bad? Actually, you can look at the part 2 of my video. The above is personal opinion. Stock do rise and fall. Stock market, the volatility in stock market can be very high. Buying stock and derivatives has risks. Thanks. Bye bye.